All right, welcome. Have you ever wondered how a business, any business, keeps track of every single dollar that comes in and goes out? The secret isn't some crazy complex algorithm. It's actually a simple but really powerful tool that brings order to financial chaos. Today, we're going to pull back the curtain on the ledger. It's truly the backbone of all accounting. So, here's our game plan for today. We're going to start with the messy data, this total chaos, really. Then we'll introduce our hero, the ledger. We'll see exactly how it works, figure out the bottom line, and then at the very end, we'll uncover its true purpose. You ready? Let's dive in. Okay, so picture this. You're running a busy little cafe. Every single day you've got hundreds of things happening, right? You're selling coffee, you're buying milk, paying your awesome baristas, covering the rent. It all gets written down, but before you know it, you're just looking at this giant, messy pile of information. And that right there is the big question. It's the fundamental challenge that every single business, big or small, has to face. How in the world do you keep all of that straight? How do you know at any given moment where your money is actually going? Well, it all starts with something called a journal. The best way to think about it is like a financial diary. You just write down every single thing that happens, one after the other, in the order it happened. It's a super important first step, but here's the catch, and it's a big one. A diary just isn't enough. And this is where you really feel the pain. Look, the journal is great for telling you what happened and when it happened, no doubt. But what if you need to know, hey, how much cash do we actually have in the bank right now? Well, with just the journal, you'd have to go back and read every single diary entry since the day you opened. Talk about slow. It's just a recipe for disaster. And this, my friends, is where our hero enters the story. The elegant solution to all that chaos is the ledger. So stick with me on this. If the journal is that messy diary, the ledger is like the ultimate, perfectly organized filing cabinet. Every single page from that diary gets sorted into its own neat, tidy folder. What the ledger does, really, is it takes all those diary entries and starts sorting them into piles. It classifies everything. All your cash transactions, boom, they go into the cash account. All your sales, they go into the sales account. Every time you do business with a customer, let's call him VJ, all of that goes into VJ's account. See? This is why they call it the principal book. It's the master organizer for, well, everything. So this is what one of those folders or accounts actually looks like. It's basically just a big T shape. Now don't get hung up on the fancy words. The left side is called debit, or DR for short, and the right side is credit, or CR. Just think of it as two columns for every single account. One side is for stuff coming in and the other is for stuff going out, depending on what kind of account it is. Okay, so let's recap. We've got our messy diary, the journal, full of notes, and we've got our brand new empty filing cabinet, the ledger. So how do we get the information from the diary into the filing cabinet? Well, there's a name for that process, and it's called posting. Yup, posting. It's literally just the process of taking each little note from the journal and putting it in the right folder in the ledger. Every debit that was in the journal gets posted as a debit in the ledger. Every credit gets posted as a credit. It's this super systematic transfer of information. And of course, there are a few simple rules to make sure we don't make a mess. Rule number 1, everything gets its own folder. Cash, sales, your landlord, your coffee supplier, each one gets a separate account. Second, it's just a little tradition, really. We write to before the stuff on the debit side and by before the stuff on the credit side. And rule number 3 is the most important. A debit in the diary is always a debit in the filing cabinet. The amount doesn't change, the side doesn't change, you're just moving it over. Okay, that's enough theory. It always makes more sense when you see it in action, right? So let's do that. We're going to track all the money we spend on stationery for 1 month and see how this whole posting thing really works. All right, check this out. On January 1st, we start the month with $480 worth of stationery already on hand. Then on the 5th, we go out and buy 800 more. And then on the 15th, we stock up again with another $1,280. Now, for an expense account like this one, every time we add more to it, that value goes on the debit side. That's the left side. Okay, so January is done. We've posted all of our stationery purchases. Now comes the moment of truth. We need to answer a really simple question. All told,
What's the bottom line? How much did we actually end up spending on stationery? It's time to find the account balance.
And you know what? Balancing this is actually pretty straightforward. First step, add up the bigger side. In this case, that's the debit side, which adds up to 2,560. We write that total at the bottom of both columns. Now the other side is empty, right? So to make them match, we just plug in that same number, 2,560, and we label it by balance C/D. That C/D just stands for carried down.
Whoa, hold on. Carried down? Brought down? Let's pause and break this down, because this jargon is actually super important, and it trips people up all the time. So balance CD, carried down, that's the magic number you use to make both sides equal. It's how you officially close the books for that period. And then, this is the cool part, that exact same number becomes the balance BD, brought down, which is the starting point for the next period. So one closes the month and the other one opens the new one. Simple, right?
And here we have it, the final step in the cycle. You see that closing number from January 31st? It gets brought down and becomes the very first entry on February 1st. The account is now perfectly balanced, totally clean, and ready for a new month of transactions. And we know with absolute certainty we're starting February with $2,560 in stationery. Okay, so we've gone through all this work, right? All this organizing, posting, balancing. You might be asking, so what? Why bother? Well, it turns out these final balances are the literal building blocks for telling a company's entire financial story. Yeah, these final numbers don't just hang out. They've got a job to do. They all go somewhere. All the balances from your income and expense accounts, like sales and stationery, they get bundled together to create your profit and loss report. That's the report that tells you if you actually made any money. And all the other accounts, things you own, like cash, and things you owe, like loans, their balances get used to build something called the balance sheet. That's like a snapshot of your company's health at one specific moment in time. So when you really boil it down, the ledger is like this incredible transformation machine. It takes that long, confusing, chaotic list of transactions and it turns it into meaningful, organized knowledge. The kind of knowledge you need to make smart decisions about your business. You know, there's a line in the material we're looking at today that just nails it. It says the ledger is the principal book because it gives you the full story for any single part of your business, all in one neat place. It's the very definition of going from chaos to clarity.
And there you have it. That's the entire journey, from a simple little diary entry to a powerful piece of a company's financial story. It really makes you think, doesn't it? Whether you're talking about a giant global company or just your own personal budget, every transaction is like a single word. And the ledger? The ledger is what arranges all those words into a story that actually makes sense. So the final question is, what story is your financial ledger telling? Thanks for diving into this with me today.